The Fed shows its hand, Nvidia shows its earnings. I'm Lisa Bernhard with Reuters, and here to talk about both is George Ball. He is chairman of Sanders Morris Harris. George, the minutes from the last U.S. Federal Reserve meeting in January just came out, which offers more clues in terms of the economy and inflation and interest rates of what Fed officials were discussing and thinking at the time. What did you glean from the minutes of the meeting?
It would have been a shock if the Fed had done anything shocking, and they didn't. It's not like the Fed to play second fiddle to anything else, particularly a corporate earnings release. But the Fed said exactly what was expected and exactly the tonality that we expected. The Fed clearly wants to make sure that at the end of the game, they've killed inflation, not just tamped it down, waiting for it to inflame again. That was to be expected. And the Fed obviously doesn't think that it's there yet.
Do you think that the Fed can't or won't wait all the way until, say, the fourth quarter to start cutting rates because it would be too close to the election and therefore make the Fed look too political?
The Fed takes great care to not look political, even though they are. They're not deaf. They do read the headlines. They're very sensitive to public opinion. They'd rather be cheered than jeered. And so the Fed is going to be aware and be wary of the election. They'll probably do whatever they can to maneuver around the 2 or 3 months pre and the month or two post election in terms of rate hikes or rate declines. It is going to be a factor in their thinking, although they'll never admit it.
Let's switch gears and talk about Nvidia and obviously the big semiconductor chip maker, particularly when it comes to artificial intelligence. There are so many headlines about this company, right? It seems every single day, are they passing Alphabet, Amazon, and market cap? What's the stock doing? What's the company doing? Just generally speaking, do you think that there is too much investor focus on Nvidia?
The Nvidia phenomenon is almost like the Taylor Swift tour. It's attracted a great deal of attention, and really the logical part of me wonders why. I guess emotionally you can say Nvidia is a precursor of what's going to happen in the next 30 years. Right now, what it does in the next 30 or 130 minutes is something that the investor and the speculator are focusing on frenetically, and that's probably foolish. If there was any way, by the way, to play Nvidia before the earnings release, it would be the precursor to probably the greatest insider trading case that ever existed. It would take Ivan Boesky and the others and make them look like dots on the ocean. Nobody knows what Nvidia is going to report, and if they did, either they or whoever leaked the information to them would be in jail. By the way, the notion that the options market has priced in an 11.1% pop or drop in the stock, depending on the revenue and earnings release from Nvidia, is also one of the more foolish things that I've seen in a number of years. Options are not that precise an indicator, even though it's nice to pretend that they are.
Taylor Swift has been compared to a lot of things, but I've never heard her compared to Nvidia. So congratulations, George. I think that's a first. Okay, so big tech, as we know, has been leading the way. Are others catching up, or at least in the game? And if so, who are they?
The big tech, let's call it the Magnificent Seven, has been the market leader for a year and a half now, the uncontested market leader. And it's not so much that the others are catching up to it as that the Magnificent Seven are fragmenting and pulling back to other stocks of other kinds and other industries. That's going to continue, I believe, over the next quarter or two. Some of the big tech stocks are doing extremely well. Now, others on their earnings front or revenue front are faltering, and their stocks are faltering. That pulling apart of the Magnificent Seven into components is a phenomenon that will exist for the next number of months. So not a bubble, but basically a deflation of the Magnificent Seven. And I think that other things, other stocks in other sectors that have been underappreciated will gain market favor and even fever as we go through the next earnings season or two. There are going to be some happy surprises in some other sectors. So that I think money is going to funnel from the big tech magnificent seven into the slightly more pedestrian but underappreciated other segments of the market.
Back in October, you predicted that the S&P 500 was going to hit 5,000. It did, although it dipped below that a bit today. But where does it go from here with your crystal ball? Please tell us.
Well, the crystal ball, I have an amp named Crystal Ball, by the way. I don't have a crystal ball, sadly enough. S&P got about 5,000 just, made an honest man out of me, which I appreciate. It's dipped somewhat now, but I am in the more, unfortunately, conventional camp that says you're going to see 5,200, 5,250 on the S&P probably in the first 6 months of the year. And that you could see some retrogression, some downside in the market after that. So I would counsel people, hopefully correctly, to stay invested, to see 5,200 or more in the S&P, and at that point, perhaps reduce their equity participation somewhat.